Yeah, Courtney, happy holidays. So Target, the story here is a third of this business is private brands. That's a key positive. They've also been doing a great job using stores as fulfillment options, particularly curbside or drive-up pickup. That's a huge idea, which has been very successful. So thinking about digital, thinking about private brands, and it's a trusted brand and store that Americans really love. That's been all working together to add both value, convenience, differentiation, and that's hard to do. The other part of Target is operating margins. So operating margins are in the 6% range, and they're going higher, and that's a key positive, especially with all these digital changes being costly. Using stores as fulfillment is a more profitable manner to deliver goods to people. So these things have been working in tandem.
Can I just drill down, though, on your idea about the private label?
Yeah.
Obviously, Target has successful private label, but many other retailers also have their own private label, whether it's Walmart, whether it's Kohl's or Macy's. It was a key pillar of Jeff Gannett's strategy from the beginning. So what's different about Target's private label? Why is it working for this retailer so much better, presumably, than others?
Yeah, Target has a rich history of really being a great merchant. And we particularly love what they've been doing with private labels because they've really identified opportunities from Good and Gather to food to Pillow Fort for kids to Cat and Jack for kids, really thinking about the customer. And Target has a great license to execute here because customers love and trust the Target brand at large. So modernizing these brands in conjunction with a new generation of shoppers which care about sustainability, transparency, being body positive, the plus size customer. These are all great aspects that Target has really been able to execute to. We like also the Kirkland brand at Costco. So the private label story here is quite special. And also there's a difference between the Macy's and apparel, which has been a tough category, versus the whole broadlines experience at Target, Courtney.
Fair enough. It's fundamentals. They got the right merchandise, right prices at the right places. So we're going to move on. We're going to talk about department stores. We know they've been a major disappointment. For example, Macy's down nearly 50% from its 52-week high. But Oliver, you hear a lot of people say, look, Jeff Gannett has some good ideas. Michelle Goss at Kohl's has some good ideas. But at the end of the day, is it a format issue?
There's a tough problem here with the mall. And the lower performing malls, the lower tier malls, are not exciting places to be. So to a certain extent, Courtney, this is a difficult problem where we think as many as 10 to 20% of Macy's stores need to be closed. At the same time, as you and I know, we've seen a lot of great success at TJ Maxx, value retailers. Even Target has a great clothing offering. So it's been fiercely competitive. And the younger customer also is interested in subscription models such as Rent the Runway, the Real, the circular economy, and rethinking clothing as rentals, rethinking clothing as service, the Uberification of retail. These are all aspects which are eating away at share. And the biggest problem is women's apparel. And that continues to be an issue, as well as the shopping mall and the future of the mall, and rethinking malls to be much more experiential.
I agree on that one about women's clothing.
Issues.
I feel like there's no excitement in women's clothing these days. You took sort of the words out of my mouth. I want to move on because I know we have a couple other things we want to cover with you. When we're looking ahead at 2020, after this very choppy year with a clear divergence between winners and losers, what retailer do you like the most for 2020?
Yeah, what we continue to be excited about is this whole value play. So Target, Walmart, Costco. We also like a specialty retailer called Boot Barn. It's a $20 billion Western wear market. I was in Texas at the rodeo. I grew up in Louisiana. This is a huge market, and Boot Barn is a share leader. They have about 5% share of this market. They can double their stores from about 250 to 500, and they're growing earnings per share at 20%. So what we're seeing is a very fascinating bifurcation in retail. You either play with extreme value players or very strong specialty leaders, such as Boot Barn, such as Ulta, which are leaders in their market, and these can compete against Amazon and offer you specialized defenses and barriers to entry.
Boot Barn is definitely an interesting one, and they have a strong foothold, no pun intended, actually, but obviously in some of these workwear categories, as well as maybe just some cool cowboy boots if you're heading to Nashville. Oliver?